The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour this Monday, this last day of June, June the 30th. My pleasure to be here Monday through Friday on market days. And we have a Dow down 33, S&P's down at 141. This is going to be very interesting. The comp index is up 2.37 at 4,400. You got gold. Let me just quickly see. Gold, the GLD is up 7 cents at 126.73. Gold is down about 2 at 13.18. Silver is down just a tad at 20.92. Bonds are up 4/30 seconds at 137. Now, when we're looking at all these different charts, the most important aspect that we've got is that weekly charts ended on Friday. Monthly charts end today. And I'm looking very closely to see where, why, how, which sectors are going to be vulnerable, if at all, today, and what the monthly charts are going to be telling us, because it's been a fantastic month so far, and we've got to see exactly what's happening by tomorrow, the first day of the month. The E-minis right now are down 50 cents, having spiked a little at the opening, or close to the opening, and looking at this chart right now, so far the little mini inside track Chapman wave support is holding. If by the end of the day the E-minis go back down below 1950 right now, they're at 1950.75. Let's just say they're trading at 1949. That's going to say, oh, be a little careful here. Interestingly, let me just move this away. The weekly chart, the daily chart of the E-minis has this pattern. It's an oval pattern, and it says a break above 1960 on the daily chart would be very positive, and a break under the support at 1952 would be quite negative. But most importantly, it is that up channel support and inside track support in the daily chart that says that this week, in the next few days, the close below 1930, and it's showing at 1952, that's a long way to go. It's about 200 points in the Dow, would in fact start to change the price picture quite a good deal. So just looking at this, let me say that the dollar, DXY, dollar index, is negative, and the Euro, EUR, USD currency pair is in a strong leg C. As I said to my subscribers to my opening call this morning, I believe that we should be making a leg C in the daily EUR, USD, and here it is, and it's actually gone above the most recent high on the 6th of June of 1.36761. So all in all, what we've got is a market that on the last day of the month is beginning to say, I'm a little bit under pressure here. Watch me very closely, because if everything is maintained the way the trends have been right now, there should be a comeback by later today and an update tomorrow. But if there's continued weakness into Wednesday, we're getting a little bit of a short-term change in trend. So I think we've covered, high-grade copper. Let me just do this. AHG. High-grade copper, strong leg B is unfolding right now. And in fact, as I said on Friday, a push higher from here, taking out the most recent high, starts leg, and that's the high in the continuous contract of 3.1915. Trading now at 3.1930 in the continuous contract. That's sort of leg D in the weekly chart. Just really interesting what's going on. So I'm going to take this opportunity right now to say we're welcoming Nahid and Safety Harbor this morning Hi, Nahid. How are you?
Hi, Basil.
How are you doing?
Very good, thank you.
Good.
Could you please look at ZU for me?
Okay, and this is Zulily Inc., caterers. I got caterers to moms. I'm not sure exactly what they do, but let me just finish my little chart here. So this has made a peak, C in the daily, trying to fill the gap. ZU is the symbol, trading at 40.61, up $1.91. Very interesting. In the weekly, this is a leg B to the upside, which has made a peak B, unless this week it does not go above 42.56, trading at 40.58 right now. It's 2 points to go. Weekly chart, a terrible single. Well, it's really, wait a minute, why is that different? Yeah, this had a single leg A, pulls back, and then very strong leg B. So the IPO comes out, goes down to 34.19, and then in February, 4 months later, it goes to 73.50. Then it pulls back, or it doesn't pull back, it plunges down to 28.75, and now it's trading back at that 40.63, trying to fill the gap, and that gap is the gap that started on the 6th of May with a high of 50.39, close of 45.89. Next day it gaps down, and the high is 37.38. So at this point, it's very good action on the day, considering the general market is down. It's up 5%. It's trying to attack the 200-period exponential moving average, which is at 41.07, just a little higher. If it goes above the 42.56 area, that's peak C from, I think, last Thursday. That'll start leg D. The MACD is good. Stochastics just okay. It's not very good. And the weekly chart is trying to turn around. It's going to take a lot of work to change the technicals there. Now let me ask you, what are you doing?
Actually, I was thinking about getting into it by option. I haven't decided what strike price, but or what month. But I was just looking at the chart and just want to know what you think.
You know, I haven't looked at it for a while. I know I looked at it close to when it came out as an IPO, and then I thought, all right, well, it's an interesting stock, interesting area. I'm still not 100% sure what they do. I'll check it out in a minute. I'm just going to finish the notation here in the 120-minute chart. So this makes a peak D, and then does it continue to EFG? Yes. So, okay. In the 120-minute chart, that's going to be an E, an F. Sorry, folks, I don't mean to keep you suspended here in midair while I'm busy doing this chart, but I need to make sure that I don't miss anything. 39.50, that's what I was looking at. Okay. A, B, C, made a D. You know, I think you're onto something here. I think you have something in terms of it came out, probably is like Facebook, in a sense it was priced incorrectly. It had to have that initial move that was more an emotional move. Then it needed the reality that it was way overpriced. And it's come back down. And now I'm going to put a plus sign rather than a down arrow, since this is still a little early. Okay. Now, if you bought an option, I'm thinking that I would not. This is not what I'd normally say. I'd normally say go a little further out.
Right.
I'm thinking that possibly it would be better to buy it closer, because if it starts to fail, let me put it this way. If Zulily Corporation, and I'm just going to do this if you don't mind, I'm going to grab that. Takes 1 second. I'm going to type in here Zulily and press the button. Okay, up to 70% off apparel for moms, babies, and kids. Shop now. Okay. I think that is an area that is really, it's a difficult area right now. Gosh. I don't know if I would go too far out, and I'll explain why. If in the next 2-3 days, even if it makes a leg D on the upside above 42.44, which of course if you had any kind of an option call right, even from now, if it did that, that option call would be looking quite good. I'm just a little nervous because if it takes out the low of last week of 35.87 for any reason, market-wise or whatever, this could be down for quite some time. You see, my thinking here is that I'd rather know whether it's going to work fairly quickly, because if it takes too much time, the way the weekly and the monthly are set up, I'm not sure that I would want to have it for too long. Do you know what I mean?
Yes, yes.
So that means you'd just be sitting there waiting. Yeah, you could wait, but it would not all go well, because if it takes out last week's low, there's a good chance it's going to go back to the low 30s. And that could take 3-4 weeks. So that's just wasting premium. I'm inclined to say, if you did anything, think about it a little bit more carefully. It does have the potential to move up. It's a very difficult area. But if it breaks out and it does get into not just the high, the 42.80 level, 42.81, which starts leg D in the daily, but if it does it soon, and it gets to the 43 to 44 area, that would be very good action. So I'd rather test that sooner than to wait for it to happen later. So my thinking is, if you're going to do it at all, I would do it with just a small position. I would get in. Let's give it another hour or two. If in the next hour it's, say, under 40.60, I'd say, okay, I'd probably want to leave it alone. That's if the general market is trying to come back or try to bounce from here. Down 24, S&P down just 34 cents. And it comes back with the market, I'd say that's good. But if it starts to pull back for any reason, I'd be inclined to say to you, Dahed, you might be right. You might have had a great pick here, but boy, if it starts to fail in the next few days, you're sitting with an option, a call option on something that might have a really difficult time going into the 43, 44, 45 area, which is kind of what you'd be looking at, right? If you're looking for a long position. Yeah, I love the fact that it's acting very well right now, up $1.99, up 5% on a day like this. But the chart pattern says you better keep that up. And if you do, you want to keep it up right away. So that's my recommendation. If you do it, do the next hour or so.
I appreciate that very much.
Okay. Thank you for calling now here.
If you had a chance, could you look at ORLY? Thank you so much, Basil.
Okay. Funny you mentioned that. I mentioned it in my newsletter this morning. I will look at that. Thank you very much.
Thank you.
Folks, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. Basil Chapman, Tiger Technicians Hour, down 5. S&P's up $1.44. Last day of the month, there should be some buying you'd expect. And I said I'm expecting some kind of a narrowish session today. So a couple of questions. I see SPX there, Chapman with accounts of PG. Okay, so let me just show you. There was a question just as I came off the air from Nahid, and she was asking me if I'd look at Orly. Let me just go there. Here we go. Okay. Orly is O'Reilly Automotive Inc. In the monthly chart, it's making kind of a rectangle formation after a peak D. The weekly chart tried to make a V-shaped pattern. It went to the previous high. I've called it an F/C in the Chapman wave at 155.94. And then the daily is the most informative right now. It went to a peak E in the Chapman wave at 154.21. It's pulled back quite sharply for the daily chart, quite sharply to the 147.21 area. So 153's, 154 down to the what did I say it was? 47 area. Bounces up to 152. Just missed it. Now you got 152.01. And then I made the pattern that I call the lowercase h. Looks like this. And that's the pattern that we can see. Now what's really interesting about it is held quite nicely so far it's in a containment area. If at any point Orly, trading at 149.81, up 5 cents, closes under 142.21. That's going to suggest that this auto parts sector, one of the stocks, Orly, is starting to weaken, and the trading range it's been in is beginning to fail, and it gives it a much larger H pattern that takes it, let me show you right here, takes it down like that, and says over the period of July, you've got to be careful because there's a chance that it could come all the way back to test the 141.08 low of the week of the 11th of April. So the way it would move sharply higher is if at any stage it takes at 152.01. Then it's got the very positive left side test of the H pattern, and it can push back towards the old high, which is, it turns out to be the all-time high in the 154s. Now, let's just do this together with some other stocks in the area. You've got AZO, stock that we were short the other day. We took a 2-point profit, I think, and then we took a 2-point loss for break even. And the reason is that on Friday it had a very good session. Instead of making that H pattern that you've just been talking about in the weekly chart, it retested the low in the daily of the left side, which is the low of 520.25. AZO is the symbol, AutoZone. And it's had a very nice bounce. Peak A, peak B, peak C on Friday. A leg C on Friday, could be a peak C if there's no new high today. I suspect it's also going to be pulling back, but just on this short-term basis, it had a little bit of a support, enough of support to say, hey, watch out if you're going to go short, because there's still enough internal strength to pop up a little bit higher. In the weekly chart, the stochastics starting to turn a little bit up at the 58% level, and the MACD is still pointing down. So as a sector, we've got two of the leading stocks. Let me go to another one, GPC, I believe, what's that, Genuine Parts Group, and or Genuine Parts Inc. That's been very strong. Now that's in leg E in the daily, and the weekly is still stuck in a trading range, but with a much better chart pattern than the others. It had a successful H pattern right there, and that's moving higher. So to answer the question, I'd be looking at that, this sector as potential short sector, but until the strength in GPC, probably that's the one that's leading right now, until it starts to fail, I'd be a little bit careful. I'd only start potential shorts, and I'd use the weakest. I don't know if AZO is now the weakest at 534. Yeah, I'd just wait on this. I think it's a sector that's vulnerable, or going to be vulnerable. Let me just see how General Motors is acting. General Motors is, in fact, also running out of steam to the upside. Had a fabulous move, but running out of steam. What's Ford doing? Ford is acting very nicely at a recovery high. In my opening call for my subscribers, we're actually long Ford. So, okay. So if money's going to newer auto stocks, maybe it'll start coming out of the sector, the parts sectors, as people are buying new cars rather than constantly repairing the old cars. So the Dow is up 45 cents now. S&P's up $1.89. Basil Chapman, 877-927-6648. We'll be right back after these messages.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. What I'm showing here is the Tiger Technician's Hour, Basil Chapman at the helm. What I'm showing here is that the IYT, the iShares Dow Jones Transportation Average Index, is in fact making in the weekly chart kind of a wedge formation. And very often wedges resolve themselves in the direction that they've been going. So this is going to be very interesting because it's very extended in the daily, in the monthly chart, but steadily so. No, wait. Very extended, but steadily so. Does that make sense? Yeah. It has just gone virtually straight up without even touching the 9-period exponential once. Since it broke out back in December of 2012. It's in leg E. That even could be an instant restart, but we're calling it leg E for now. The MACD is very strong. Fast-moving average is looking good. The stochastic's up at 95%. That is really strong. On-balance volume is reaching highs. And it's gone above the left side, right side, what I call the one-to-one extension, A to B equals C to D. It's gone quite a bit above it in price as well as in time. 1, 2, 3, 4 bars in the monthly, more than I would have expected. And even more important than that, the daily chart is the one that's just going to give us a lot of information because it stopped dead at 148.18. That was peak after a little doji candle right on the 9th of June. And let me open this up a little bit and you'll see. And the last high went to 147.72. just 40 cents lower. Now it's got a nice candle, and that candle is saying if the MACD crosses positively and the stochastic at 66% is able to climb into the 78 and then 80% area, there could be even higher prices for the IYT. But more importantly, it's remained in the up channel. You see that there's the up channel in the daily. And we're going to see resistance that starts to show itself in this kind of formation. Let me just for a moment take away this color code right there. I've just got a rectangle that's showing the parameters that I'd be looking at. And let me just do this. I'm going to draw a little V right there, and the right side there, and then a little tinier V right there, left side, and right side. And that says that V has the potential, this is a very interesting thing, that V has the potential to become a 1-to-1, an A to B equals C to D, if there is a decisive move above 148.18. Because that would start, yes, it could have been an instant restart, and this could be A, B, and it'll start a brand new C, but even a C takes you to a D. And if this is a brand new, from the peak F, doji high, if this in fact is a brand new buy signal to buy mode, then you should get B above 147.72, and then a C and a D. So I don't want to make it complicated. Let me just make it real easy. If the transportation iShares, ETF, trading at 147.26, up 63 cents right now, 0.43%, is able to take out that 148.18 last all-time high, that would augur well for this particular pattern and say you should get at least a move from 142.90 to 147.72, 142.90. Let's just for now call it 2 points from the low that was made last week, Wednesday, Thursday, at about 144.71. So that takes you to, I just said 2 points from there. Well, 2 points from there takes you 146.71. Hang there, what happened? What did I say there? 142.90. I'm sorry, 142.90 is 5 points. So 5 points from here, we take you to 149.71 area. So this is a very important moment because if it fails, it's making an arch formation, and that's going to be very important because now I need to put this rectangle back, because within the rectangle formation, very often at highs, you can get a pullback, and then you can get the pattern that I call the H. Sometimes that H can go to a lowercase h, going to a lowercase m. So I'm watching this very closely. Question in the den, REGN, Regeneron, trading Regeneron Pharmaceuticals. Oops, don't have the notation. I got the notation in the monthly, that's peak F, and then the daily is, let me just double check. That's the low right there. You need to always pull back enough. If you go back enough, you won't make a mistake. Start your wave count too early. That's an A minus. And now we're going to go A. Unfortunately, I've got to do a double click on each one. That's being repaired. But C, I could have done this without the, there we are. E, and I made it perfect. So that's a hat trick top for the last high. Let me just double check. So peak F in the daily chart of Regeneron, trading at 284.76, up 7.49. Pulls back from the 320 area. Let's see what the exact number is. 320, exactly, 320 round number high. Love these round numbers. 320 round number high. And it pulls back to the 270. Was it a 270 round number low? No. 269.50. And that 269.50 is going to get the big test in a moment because, a moment being this week. So there's trough A, trough B, trough C, trough D. And that says that this move here, which is now what I call a gray leg AY because it's sharply underneath the previous high. It's what I call a retracement rally failure mode. Needs to see the stochastic bounce strongly from 14% into the 20-something% area. And the MACD takes a long time to cross back positive. So this right now, I'm just calling a bounce. And it's going to be very interesting because the weekly chart is quite negative technically. The monthly chart is turned negative. And that long candle low long candle high bar that took it to 352.49. 352.49. Yeah, 352.49 the week of the 7th of March. Was retested. That's the characteristic of this long-legged candle, and then it broke down. So the trend right now for it is to the downside. Can it bounce? Is it worth looking at this as bounce material? It could go a little bit higher. Just for the moment, I'd like to take a look at the IBB. That is the at 256.80. Yeah, IBB's kind of stalled. Oh, this is going to be very interesting. We'll take a look at it in a moment, but I first want to go to our caller in Cambridge, Massachusetts, Kathy. Hi, Kathy. How are you?
Hi, Basil. How are you doing today?
Very well, thank you.
I emailed you over the weekend about SanDisk.
Yes.
And I went short today, and obviously I'll just close it out if it goes over that 104 mark. As we had said, it was a round number top. When I look at, do you use extended hour stuff at all for your?
I do not use extended hours. I've found that I can only use extended hours. I wouldn't say successfully, but in my methodology, it works a lot better to use extended hours in the futures contracts. I try to stick just to the 9:30 to 4 o'clock trading range for the stocks themselves. In fact, for the cash indexes and the stocks. Okay. But in that particular instance, it went to peak A, B, C in the 120-minute chart, but I need to go further back to see where that actually started. Yes. And then it made a rectangle, and if it goes above 104.00, and right now it's trading at 103.96, it really does look like it wants to, based on the 120-minute chart. Right. That would suggest to me that it isn't quite done yet. And I tend to agree with you. When you've got the round number, you just need to go 1 penny above that round number, and then you say, you know what, I've lost my little key, or I've lost my
my signal.
My one little indicator that
right.
was a potential, because it had made a peak E, and the MACD was pulling back. The stochastic was holding quite well. So once you lose that, you say, okay, it could go even higher. I don't want to be part of this, because certainly at all-time highs, if it breaks and it wants to go even higher, it uses every excuse. And when the market itself is a little bit weak and it tends to go up, it's saying it's got good relative strength. But this is another one. This is SanDisk, folks. SNDK, SanDisk Core, hard drives. Hard drive business and computer business must be cooking, because this thing has gone from under 30 and now it's screaming at a 103.91, very strong. The single leg D has gone from December of 2013 with a low of 64.50, and since then every single month has had higher highs, but not just higher highs, sharply higher highs. Now, historically, SanDisk back in 2005, it made a high of 79.80. I just want to grab this and see if I can pinpoint, because we remember this back in the hot days of 2000. Yep, it made its high, all-time high before, back in March of 2000, when the general market, when the NASDAQ and the QQQ series made their highs, and this was at 84.81. I'm not sure about any splits or anything like that. And that was a leg C, if I remember correctly. Yeah, and then it failed, and then it came back. This has this beautiful U pattern. When it makes its top in the monthly chart, it's as if everything goes right going up, and then everything goes wrong going down. Because the last time, when it pulled back from the $4.30 level in September of 2001, it ran up in a peak A, B, C, D, E to 79.80, which was lower than the 80 area that it made the previous all-time high, its initial all-time high. Went to 65.01, then plunged to 5.07, and had a round number monthly close of 8. That's really interesting. Then it went to peak A, B, C, D, E, F, and then a modest little A, or that could have been a G, an A minus, pulls back and starts a brand new move from 30.99, and that's the move that it's in. So trying to, well, first of all,
well, if you go short right now, you got a really tight stop on it. You know,
yes.
That's like 15 cents below it's at 104. So that's not an issue, because to be able to short
a stock in the $100 area and have literally a point and a half or something like that stop, and then you're going to get a lot of information, because if it breaks out, in this particular instance, if it breaks out, what I'd be looking at is, let's see, could that be an A to B? Either way. Yeah, if it breaks out, it would say, look, don't do anything yet until you're looking at the 120-minute chart, what the count is, and then what you're looking at in the daily. But as it stands right now, it's very clear to me that if it pops up, yes, we could call it F/maybe A in the daily, or F/maybe B. 1, 2, 3. That was actually an instant restart on the Chapman wave methodology from the high that was made on the 11th of June, because within 3 days, and without breaking down, it went straight to a new high above the D, and it was above 100.81. So that could be A, then this would be B, so F/B. I would just hold off. And to tell you the truth, the fact that it's rallying like this says, and the weekly chart is still very strong, it says to me that it's probably not more than a very short-term short, because that weekly chart has not yet set anything in motion that says that it's a negative. But I am looking at one particular moving average that's above the slow moving average of the 9 EMA, and it's still very strong, but it's going to be the clue. So I would not put, now that I'm looking at it in the weekly chart, I'm saying if it didn't work right away, and in fact, if it does work at all, Sanders needs to close below 100 for about 2 out of 3 sessions, with no sign of strength after that, making lower highs and lower lows to actually impact the weekly chart, although the weekly chart looks like it is getting ready for some kind of consolidation. I've got to just keep it in mind and say, this is actually this is a pretty good economic sign. I was talking to my friend who has a semiconductor company over the weekend, and he says things are going very nicely. So maybe what we're looking at is the semiconductor area, together with the hard drive, together with a stock like MU. Let me just get MU over here. MU. I've got to count this as a possible leg B in the weekly, even though it's a leg E. Oh, I can't believe that. Let me just see. Could that be a G? No, it can't be a G. This is unbelievable. Micron was way below 5 back in 2011, and it's trading now at 32.68. And this, to me, is, I would call it a bellwether for the group, Micron Technology, and in the computer sector. So I think that this is probably an area that's telling us that if there is a market pullback, it's going to come from other factors at this particular time, because so far a group that's very important, very sensitive to the economy, is actually doing very nicely. So, hey, thanks for bringing this to my attention. And at the same time, I'm putting it on my watch list right now. Now, one of the things I just wanted to mention, because it hit the 104 round number and everything was looking like it should pull back, the market, the price is the arbiter of the trend. So we must watch that. That's what the technicals are even a little less important than the price right now. So let's watch this one very closely. Hey, Kathy, thank you so much for calling.
All right. Have a nice holiday weekend, Basil.
Thank you very much.
All right.
That's Kathy in Cambridge, and we'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. This is the last segment. And, of course, you have Larry Pesavento. Should be a great show, as always, with Larry coming up. And we've got shows all the way through to 6 o'clock, wrapped up by Tom O'Brien. Don't forget to listen in. So what we're looking at here, question in the den about the biotechs. IBB is trading at 256.89. Just kind of stuck here. Not showing too much strength, up 16 cents. And the weekly chart is holding okay, but what's really important about this is looking at the components. If you look at BIB, one of the best going into 2014, then suddenly stalled out at 358.89 high, trading right now at 316. Same sort of pattern, just kind of stalling. Weekly chart is not looking that great. You've got Amgen. Amgen right now is trading down. No, it's up 27 cents at 118.83. Now that's going to be important because it's a leg B. A peak B in the weekly in the retracement, having made a peak D in the monthly chart. So all of these are just in the same kind of pattern, saying we've had a huge run. We've had a very sharp pullback, some cases more than 20%, and it's coming back again into the retracement area that says this is a bounce, and if in this bounce you can't garner more strength to go way back towards the all-time highs, but instead you roll over heading towards the recent lows. That's going to say that this particular sector is not the sector to be in right now. There are other sectors that are doing well. For instance, the auto companies are holding very nicely here. This is very interesting because when you're looking at rotation, for instance, I'm looking at, for my opening call subscribers, our portfolio, we've got under the radar stocks, which seem to be doing very nicely today. We did get stopped out of one, and that was in the semiconductor area. I thought there was a chance that we would have a pullback from the peak F-top. This is the same as SanDisk. And we had a very tight stop. We got stopped out. So that means we've got quite a high level of cash, looking to put it to work, wanted to put it to work in a very hot stock. Hasn't so far. We haven't been able to buy it because it gapped up this morning. But that's the way I want to play it right now. I want to be defensive, looking at shorts. I want to be looking at selectively at longs, and on the sentiment side, I just don't want to play the sentiment right now. But I did look. Intel, INTC is trading right now. INTC is trading at 30.89, down 4 cents, acting very well. Possibly 31 round number high again today. So possibly just getting a little bit of a breather coming, who knows? But in the meantime, back at the ranch, this is an old fogey that was down in the teens just 2 years ago. And now look at it. It's up in the 30 area, 30.89 at recovery highs. Now, this is a stock that's known its share of, I have to redo all those notations. You obviously know that I would have had this notated backwards and forwards from the highs of 75.83 back in August of 2000. Remember that the S&P held a little bit better than the Dow back in 2000. Look at the SMHs. It made its high and then tanked. But some of the NASDAQ momentum stocks actually held very well, right all the way into 3/4 of the year, or at least past halfway into the year, before in 2000 starting to really plunge. So let's just do this. I want to look at the VIX index because we always look at the VIX index. In the VIX index, the low that's just been made in June, now this is going to be really interesting. In the weekly chart, the low was down at the 10.34 area, 10.34. That is going to be a clue to us, because if the VIX starts to rally, the rally cannot just be one pop-up and then a pullback. The VIX needs to, at trading at 11.46, needs to get into the high 13s and hold. And then you've got to get bad news accompanying, and the market must relate poorly to the news that comes out. So that's what we're watching for. In the meantime, kind of a little toppy action here, watching it real closely. I'll be back tomorrow. Stay tuned for Larry. Have a great day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.